Good evening, good evening, everyone. I am super excited for today. Today we have another game-changing topic that you will definitely be excited to hear content about because it's all about wealth building. It's all about having the right mindset to build wealth. And on today, we have the amazing honor to have Terri with us. Terri Alford is a former principal turned entrepreneur and economic empowered educator. Some refer to her as Principal Alford because of the valuable education she provides to business owners, women, and communities that she serves. She owns the TNA Financial Group, in which she helps individuals and families and businesses become debt-free and retire with dignity. That's the key word, people. Retiring. Not retiring when you're old, but retiring when you're young. We don't need to wait until we're 65 to retire because Social Security might not be out there in them streets. So she is educating families and proven strategies and financial principles to build generational wealth. It is my privilege and honor to present to you guys Ms. Terri Alford.
Hello, good evening, good evening. Thank you for this amazing and wonderful opportunity.
You're welcome. I'm super excited to hear everything you will be sharing with us on this day.
So am I. I thank you for that introduction, and I have just a few things that I wanted to share. But do you have any questions for me before I begin?
So I do know that some people are interested in insurance and learning about the cash value aspect of insurance and basically how insurance can actually help them to build wealth.
Got it. Excellent. So here's what I want to talk about first, because I know we have some people who are in the group who are business owners and some who are entrepreneurs, will be an entrepreneur, working 9 to 5, multiple jobs, multiple streams, stay-at-home moms. It's a lot of people that may be listening to this, and I want to make sure I give something to everyone. So
Okay.
I'll first start off with 5 things that kept me grounded and 5 things that I did in order to be able to make 6 figures during the pandemic. So the first thing on my entrepreneurial journey that I learned is that you always have to stay ready, so you never have to get ready, right? So when you stay ready, if there is an opportunity that arises, like you're always resourceful. You have your resources, you have things on your computer, you have people that you can reach out to. You always want to be in position for you to be able to go next level in your business. And even if you are looking to climb the corporate ladder, that is a big thing. Stay ready so you never have to get ready. I became a principal at the age of 27. And if you had told me I was going to do that at the age of 21, I would have said absolutely not. But I already had my master's, I already had the experience, I already had the connections. So when I interviewed, I got the job. Now I'm a full-time entrepreneur. And the second thing I would say is prepare for your transition before that transition happens. So we can talk about that on the business side, going from an entrepreneur to a full-time business owner, or we can even talk about leaving this earth, transitioning on to glory, because the truth of the matter is we're here for a set period of time.
Right.
And so if we want to build wealth and we want to be able to give the next generation or the generation behind us the life or the lifestyle that we didn't have, we want to make sure that we prepare for that. So always prepare for the transition before it happens. I didn't know that I was going to leave my school as soon as I did, but I knew one day I would be a full-time entrepreneur. What I already had was a book of business or potential business partners, people that I can reach out to. I was already networking, already had resources to where I can have my own benefits plan outside of the job. There are so many people who stay at their job because they're like, oh, well, I need these benefits. But if you really have a benefit specialist or a retirement specialist such as myself look at those benefits with you, you will realize that you may be in position to pay for your own life insurance, health insurance, dental insurance. I pay for all of those things on my own with no 9 to 5. So if you really are preparing to transition to full-time entrepreneurship, then you want to prepare ahead of time. Look at your finances. Look at how you're managing your money now while you have a job.
Right.
Because when you don't have a job and you go into full-time entrepreneurship, you're going to have some high months. You're going to have some low months. And you want to make sure that you have enough to carry you through those months in which your income is not as high. So make sure that you have those systems, those habits in place so you can truly be ready to go into entrepreneurship and not have to go into entrepreneurship and go back to getting a job and trying another business. You want to work those things simultaneously. The third thing I want to give you is to network. To grow your net worth. There is nothing like building a business with relationships. You can market on social media. You can pay for billboards. You can have a TV ad. You can be on commercials. But there's nothing like a warm referral. There is nothing like having someone say, you know what? Terry's a good person. Terry's a great person to work with. She helped me realize X, Y, and Z in my financial situation. I'm sure she can help you in some type of way too. You want to network to grow your network. These are things that I did in order to get to 6 figures in my business. Yes, financial services is a great industry with lucrative income, but it's also a difficult industry if you do not do these things, if you do not network, if you are not disciplined, if you give up easily. It's going to be hard to make 6 figures because you have to truly be your own boss. So when you're your own boss, you have to discipline yourself. You have to tell yourself no sometimes. You have to put yourself in check sometimes because you are your own boss, right? So then the next thing I have is to do something for your business every day. Even those days in which you don't feel like getting out of bed, you don't feel like just being your full self, do something every day. Make a post or read a book for professional development. Learn something new in regards to your business, but do something every single day. You have to fall in love with the process and not always just be looking at the product. So be thankful for that process and do something for your business every day. And then the last thing before I get into how you can truly build wealth with insurance, because I do know that there may be someone who is looking to start another business. You may be interested in another source of income, and you may say, you know what, Terry, I would be interested in doing what you do, and I think you will be a great coach. Here's the last thing I will share with you. You should expect attacks and rise above. So whenever you're doing something good, whenever you're doing something innovative, whenever you're doing something cutting edge, attacks are going to come. You just have to expect them. They don't feel good. They will make you feel like somebody has stabbed you in the back, beat you up. You got a bloody nose. You're like, I really don't want to do this anymore. I really started this business and thought my friends and my family would support me. You need to expect attacks. People who are closest to you may be the people who will attack you in your business or attack you on your entrepreneurship journey. So I'm just letting you know tonight to expect it and rise above it. Had I not dealt with the attacks and rose above the negativity that I endured on my way to 6 figures, I would have never made it there. And so now that I am a 6-figure earner, like my next goal is to make multiple 6 figures and teach other people how to make 6 figures. But I'm telling you, these are the things that you need to do in order to truly have that thick skin and be able to be a full-time entrepreneur and be successful at it so that you can truly live the life that you want to live. Do you have any questions before I transition into talking about the wealth and the insurance?
So I think that your points for growth and consistency are on point, because I know those were some things that I had to deal with personally on my journey, and I think that I commend you for being approachable, because I know my struggle was I got to that level when I was 22. So when I got there, it just made me reevaluate who my friends truly were. And you realize that the people you're connected to can either hinder you from keep going, or they can actually elevate you. So networking and surrounding yourself with the right people as you're trying to grow is essential, as when you're trying to get to that 6-figure marker or even 7 figures. And that's the goal. Like, structure, you gotta get you some form of structure in your life so that you can propel yourself forward, whether it's blocking out an hour or however you do it, so that you can consistently work towards that business.
Yes, absolutely. And I was speaking with one of my business partners or mentees the other day, and he was like, "Well, yes, Terri, I spoke to 5 people, and those calls were not successful." And I was like, "Yes, they were. You learned a lot during the process, but you understand that you're building a business, right?" And he was like, "Yes." And I was like, "Well, let's think about the man who created Amazon. If he talked to 5 family members and they did not want to support his business, we wouldn't have Amazon."
Right.
They may not have wanted to support his business, but you're building a business. You're going to have so many people who are going to be your clients and your customers that you do not know. So part of being a business owner is being able to be emotionally stable and having that emotional intelligence to be strong and understand that it is a process. You see the end goal, but you have to be strong enough to know, in order for me to get there, I have to learn all of these things along the way.
Right.
So I, again, thank you for allowing me to share that. I just wanted to speak on that because of the topic tonight. And building wealth is something that you do when you're disciplined. It just doesn't happen by accident. Now, you can be born into a wealthy family. I wasn't. But you can be born into a wealthy family and fumble the ball and lose everything.
Mm-hmm.
You just don't build wealth on accident. It's something that you do intentionally. It's something that you may have to sacrifice for in order for it to happen. You have to have some delayed gratification in order for you to have that wealth. So I want to show you something that I think is going to open up the floor for a lot of questions. I think this is the most simplistic way to show you how beautiful life insurance is in terms of building wealth. It is a truly critical part of your investment portfolio, because you are investing into yourself, you're investing into your family's future, and some people are not aware that you can actually use these policies to fund your children's education. You can use it as money for a down payment on a home. You can purchase a car with it. You can even get another business with a life insurance policy. As a matter of fact, I have a lady that I volunteer with who actually has a desire to open up her own dental practice. So she reached out to me and said, "Okay, Terri, I need life insurance." And I was like, "Okay." Like, why you gotta say it like that? She's like, "I'm trying to get this loan from the bank to open up my dental firm, but they want me to have a life insurance policy as collateral." I was like, "Oh, no problem. Just go ahead and do that." So some people are not aware that you can actually use your life insurance for business.
Right.
That's another topic for another day. So I'm going to share my screen if it is okay. And I'm just going to share, actually, before I share about the $1 million baby strategy, which is what I call it, I want to share a video. And this video is going to help you understand and see why I said it's imperative, like truly, truly imperative for you to have something called accelerated living benefits. If you have a small budget, get it in a term policy. If you have a larger budget, get it in a permanent policy. But you need to get it, because we talked about retiring and retiring early. Well, you have to be intentional, and that's something that you have to plan for. So in order for that plan to be executed, you must look at planning for the unexpected. The unexpected are the things that you do not see. And one of the things that we do not plan for or we do not foresee is illness. Sickness does not discriminate. Doesn't care how old you are, how young you are, your race, your educational background. It doesn't even care about how you eat, to be honest, because there are really healthy, muscular people out there being diagnosed with cancer and having heart attacks because of complications from COVID. So sickness, illness does not discriminate. And I want to show you a video. I do not own the rights to this video. I must say that. I am sharing this video for informational purposes only because I want you to be truly informed. If you get nothing else from this call, I want you to understand in order for you to build wealth, you have to make a sacrifice and you have to plan for the unexpected. So here, this could be one of the attacks that may happen when you are in business. It could be an illness. So I'm going to show you how the accelerated living benefits work through this video. And after this video, I want to show you on an even greater scale how life insurance can not only be used as you're living for an unforeseen event, but it can also be used to plan and build wealth for your family. So with Ms. Sanders' permission, I'm going to share my screen and play this video here. And I have a lot of windows open as well. So here we go.
And I'm Eugene Carson.
And this is our living benefits story. We live in Riverside, California. We have 5 kids together, 9, 8, 2, and 1. And 1 on the way.
My name is Mark Peden. I work with Financial Concepts of America here in Anaheim, California. So I met Amanda and Eugene shortly after they purchased the home. They had responded to a letter in regards to protecting their home loan with our living benefit program. I felt like I'm invincible, I'm, young and strong. And like she said, we bought our first house together and we have children now. And when I got that letter in the mail, I said, we need to give this guy a call. So with living benefits, it allows the insured individual when catastrophe strikes and they have a sickness or an accident, they're able to accelerate their death benefit and use those proceeds now rather than waiting until they die. I was like, okay, we need to get this because cancer runs in my family and I thought it would be a great thing to have.
I'm 33 years old, healthy. Well, I guess maybe we'll use it later in life.
Amanda was actually approved preferred, which means that she's in better health than average. We knew it was there in the back of our mind. We never thought about it. We just made our monthly premiums.
I basically found out we were pregnant about a month later. My first symptom, I remember it like it was yesterday. We're sitting at the table, all 3 kids then, and we were eating, and I took a bite of food, and I choked like I've never choked before. I thought to myself, I'm just going to take some more bites. And then as time progressed in the weeks, and my neck started to swell up, and the nights too, I would wake up gasping for air. I went to work, my heart was fast, beating real fast, and heart attack. They took me down to the ER when I got to the floor. The doctors came in and told me I have a mass in my chest and you're going to be wheeled up onto the oncology floor. I'm like, okay, well, I guess I have cancer.
So approximately 11 months after the initial policy issue, I was having a meeting with Eugene. And at that point, he told me that Amanda had been diagnosed with cancer. I was, obviously, shaken up about it really bad. And, I knew God was on our side, so I was like, let's just go and battle this thing.
When they explained the treatment, like, oh, you have to be admitted every 3 weeks for 6 days for 6 months. I'm like, well, okay, that means I'm going to be away from my son. 4 hours a day visit is nothing compared to a 24-hour day and night feedings. And it was hard because, I was breastfeeding and I had to stop. And, that hurt a lot too because we worked so hard for that. I was out totally for a medical leave because of the cancer for a year. When my job dropped me from the insurance, we're not issuing you a check anymore. You have no more PTO. You have no more sick time.
Most people don't realize how devastating a critical or chronic illness can be. We not only lose our income, but now we have the cost of care, co-payments, deductibles that can be significant. And until something actually happens, most people don't realize how expensive it could be. We have the mortgage, we have the car payments, we have private school tuition, we had credit card bills, car payments, groceries, okay? And then when it was time to actually cash in on that life insurance policy and to see whether or not everything Mark represented was going to come true, it came true. And it came true above and beyond our expectations. We had a policy with a $405,000 death benefit, and she received a check for $343,000 after not even owning the policy for a full year. I thought it was going to be a real low amount, but no, they really paid huge amount.
We all know stress can kill you, so financial stress is huge. And to have that taken away in a sense when you're sick at your worst is a nice feeling. Probably the best feeling, you know what I mean? It's the best feeling.
So the living benefits, it came in right on time. All that worry, stress, it just evaporated instantly. That's the power of the living benefits. It's very powerful because you're able to focus on what's important, which is getting your family back on track and keeping your family healthy.
I'm super thankful for the life insurance policy. I'm thankful that chapter in our lives is behind us.
So don't just get one policy for your family, get a policy for every member of your family. All 4 of our children have policies, and Emma, she's in here. We're going to get another policy for Emma. So everybody in your family needs a policy. Go get a policy today.
All righty. So, thank you for watching that video. Ms. Sanders, have you ever seen that video before? Or ever heard of anything like that?
So I have heard of things like that. I just haven't seen that video in particular.
Gotcha. So what was your favorite part of that video? I'm curious.
I think that to actually be able to have life insurance, but use the value of that life insurance to actually build and support your family for a lifestyle is a very good asset. And what a lot of people don't know, there are a lot of celebrities who are doing this. Waka Flocka is actually one who is always encouraging people to go and get a life insurance policy to help build yourself a business. He's always telling you to get your credit right so that you can build those things that you need to do, because he even said that for himself that this is one of the things that he's doing, and he has a structure set up where he has multiple businesses flowing into each other while he's using these insurance policies to really propel and build his business.
Absolutely. Several celebrities have spoken on it. Candy Birds, Waka Flocka. The wealthy have life insurance. Do you understand? Do not get explicit. The wealthy have life insurance. They can't get enough life insurance because they understand all of its benefits. So I want to share a sample illustration that I created for my friend now, 2 years ago in 2020. And I refer to this as the $1 Million Baby Strategy. And this plan is structured so that the child will have money for college, early retirement, money, and then also have accelerated living benefits access in the event that that child gets sick with a heart attack, stroke, cancer, become blind, lose 2 out of 6 of their daily functions. It's a number of things that can happen. Unfortunately, children get sick, but oftentimes they do not pass away, but their parents may have to stop working to take care of the child, to take their children to the best hospitals in the country. In that case, we don't want the parents to be without income. We don't want the parents to be without money. So just like in that video, how the mother was able to get over $343,000 when she was diagnosed with cancer, this baby will be able to have as much as needed, as approved for, if this baby gets sick. But there are other benefits outside of if the baby gets sick. Let's look at if the baby does not get sick. Let's look at if the baby does not die. With this example, I have a 3-year-old girl, non-tobacco user in the state of Texas. And her parents specifically asked for a starting face amount of $500,000. A face amount is the death benefit, also known as the policy proceeds. So if that baby was to pass away, the family gets a check for $500,000. I did this with the strategy called increasing. It has an increase in death benefit. I won't go into too many details to overwhelm you all. With the increase in death benefit, the older the child gets, the more coverage they have. So the parents are paying $268.35 into this plan per month. Does it cost that much for a baby to have life insurance? Absolutely not. It does not cost $268 per month. But the parents are purposefully overfunding the life insurance account, and they're using a strategy called indexing. Indexing is putting your money into the insurance policy so that the insurance company can do the investing for you, and then they pay you a return on your money. So you don't have to worry about the downside losses of the market, but you get the market-like gains. Insurance companies, they run everything. They run the banks. Take a look. Research it. Look and see how much of the U.S. Federal Reserve money is in life insurance. Take a look. Look at Wells Fargo and see how much of Wells Fargo's money is in life insurance.
That's how they insure your money.
Hello. So the parents are paying $268 per month, and that's $3,220 per year. So once this baby turns 18 years old, if she chooses, or if the parents choose, then she's able to withdraw money. The way I structured this is for her to withdraw money for 4 years for college. So she's able to withdraw $22,189 for 4 years. Her parents have only put in $64,000 after 20 years, but she has been able to take out $88,000. Did we do good by this family? Absolutely. If this child does not continue to pay into this plan, did they get all of their money back plus some? Absolutely. Did they have money that they could access if the child got sick with a critical, chronic, or terminal illness? Absolutely. Win, win, win. But what if that child continues to pay into the plan? And that child says, I'm going to continue to pay into this plan until I'm 65 and then I want to receive income. Well, first of all, before the child turns 65, if she does not hold her horses, and if this performs as it has been performing, and this is just an illustration, this is not an actual policy. This is an illustration that I did in 2020. So I will put that out there as a disclaimer. If you want a plan like this, then we have to do an illustration today for your child based on their age and the indexing strategies and all of that. So here we have this child at the age of 60. Let's say if she decides to cancel this plan completely and she is able to grow money in this plan like we show here in the far right column, at the age of 60, this baby is able to say, you know what? I don't want this plan anymore. This is a fidelity and guarantee illustration, by the way. I don't want this plan anymore. Fidelity and guarantee, give me my check. Fidelity and guarantee will write her a check for $1,084,058. Canceling. That's the surrender value. Why would an insurance company pay a 60-year-old woman $1 million and she did not die? Because if she dies, they have to pay her family $1.7 million. But let's say this baby continues to pay into this plan, and at the age of 65, she decides to start receiving income from this policy. This baby is able to receive $196,627 a year for the next 20 years. That's $4 million in tax advantage income. $4 million in tax advantage income. Now, at the age of 65, if she can't hold her horses and be still and let the money continue to grow and take it out little bit by little bit, then she gets the surrender value, which is at that moment 1.6 million. This is just one example of several ways that you can create and build wealth with a life insurance product called an IUL. I call this the $1 million baby strategy, because you're setting the baby to be a millionaire before they retire or he or she retires. So an IUL stands for index, because the money is indexed to the market, index universal life policy. The baby is able to get everything that she put in out if she does not die. If she does die, her family gets a large death benefit. And here's the thing, if this baby lives to be past 90, let's say she passes away at 93, the death benefit is 1.5. That's still more than we started with. We started with $500,000. That's a win-win-win situation to me. When I have babies, all my babies are going to be $1 million babies. So, I am going to say, when you are looking for ways to build wealth, you must have accelerated living benefits in your portfolio, because you can have all these incredible plans with your stocks, bonds, mutual funds, cryptocurrency, and all those other things. But if you get diagnosed with a critical, chronic, or terminal illness, you're going to want to take money from all of those accounts and deplete your accounts, and then you'll have to start over. Don't do that. Use the insurance company's money to take care of your medical needs, your housing needs, your car needs. That's what it's there for. If you heard something, or I shared something with you that really resonated with you, and you're like, oh my gosh, I want to learn more, please reach out. I want to share more with you. This is like a smidget of what I can show you that you can do with life insurance and life insurance products. Not all life insurance products are called a life insurance policy. There are some other things that I can show you. Right. And I'd be more than happy to. But you may say, you know what, I do want to have a business. I feel like Terri is pretty amazing. I think I want her to be my coach and teach me how to build a business in financial services. Please reach out. I am looking for people to help me expand TNA financial group across the nation, but I'm also looking for people who are looking to build their own insurance practice. You can use TNA Financial Group if you want to, or you can use your own name.
Now, can you repeat the name of the policy that you said that you were just illustrating to everyone?
So that is an illustration from an IUL. So the things about IULs are flexible premium adjustable policy. Okay. So I structured that one specifically for it to illustrate that way. But that is not the only way that you can use an IUL. Some people use IULs with a 7-pay strategy. And if they have quite a bit of money, they may put in $30,000 a year for 7 years and then just let it sit. And then at the age of retirement, they receive income. Right. So there are a number of ways that you can use it and structure it. I just wanted to show one for the sake of this call, but if somebody's interested in seeing more examples, more personalized illustrations, I'll be more than happy to set an appointment, do a consultation with you, and earn your business. And if you, once again, say, hey, I want to learn how to do that because I'm passionate about teaching people about financial literacy, reach out to me. I want to show you too, because together everybody achieves more. And there's too many people out there who don't know these products exist, or they're misinformed. And so I know that having a critical, chronic, or terminal illness can creep up on anybody, even myself. And so I made sure I had enough. So in the event I get sick, guess what? If I have to stop working, or I have to stop talking, because I talk more than anything with the work that I do, I'm still able to know that all my bills are going to be taken care of. Everything is going to be paid. And I don't have to take money out of my other investments, because that's what this life insurance is for. It's called life insurance for a reason. It's not just death insurance. If it was death insurance, that's what we would call it.
True.
Yes, people, companies pay a death benefit when somebody passes away, but it's called life insurance for a reason. Okay.
Well, I know I definitely will be reaching out. I have some whole life policies that are very old that my grandmother had when I was younger, that she's already paid for, and they just sitting there not even really accumulating money. So I know I want to transfer those into a different type of policy. I already have a insurance multiple insurance policies through my parents being military, but I definitely want to diversify my insurance in different ways, because that's key for me in building and stacking the insurance value the same way I've done with my stocks and my bonds.
Yes, congratulations in advance. I would love to do a policy review with you. I don't charge a fee for that. I will be more than happy to take a look at what you have and let you know, like, hey, this is a great plan, but it doesn't have accelerated living benefits. Or,
Oh, well, I
hey,
know the ones that I have don't have the accelerated benefits. I just know they have high cash value. Like if something was to happen, like people would I used to joke with my mom. I was like, I don't know if I need to stay in the same house with you, because if anything happened to me, the military giving you $400K. So, and then they had multiple policies. So I was like, y'all just trying to knock me off to get this almost $1 million. But I definitely know that it's just them paying out that value versus any other type of benefits. But I know that the whole life policies that she had, because back then they had policies for like $200, $400. They had cash value where you can borrow against them, but it wasn't a lot. So I have a couple of those that I definitely need to cash in and put them somewhere else.
So I'll be more than happy to help you with that. Sis, I actually am so glad that we got a chance to connect through the group. And if you have any more questions, just let me know. I'm not able to see the Facebook group right
That's what
now.
I was looking at. I know one person asked what type of policy. What would be the average starting premium for that type of policy?
It depends on the person's age,
Okay.
and when they want to retire or when they want to receive money. So I showed you a 3-year-old
Right.
example, right? If the person that's asking the question is 45 years old, but they want to see those same type of returns, then they definitely have to put more money in because they don't have as much time to accumulate as that 3-year-old.
Right.
So it really depends on the age and what your goals are. But I find the right place for you and stay within budget. But truth be told, it's really based on how young you are, how healthy you are, and how soon do you want to start using that cash value and how you want to use it.
Okay. So for those who want to start, for those who want to use the insurance policies to actually build a business or help with a business, how soon could they have access to those funds?
Well, I work with 10 different carriers. One of my carriers allow you to be able to use the money after the first year.
Okay.
But I wouldn't even touch it until 10 years later. You want that cash accumulation to grow. This is a long-term plan too. This is not something where you put money in and take money out, and put money in and take money out, because you have to give it time to accumulate that cash. And then you also have to think about the fact you're still paying for that insurance coverage.
Right.
Yeah, so if you want to use this for a business, then the first thing is, if you need a collateral loan from the bank, like you could just get a policy with a large death benefit, and then the bank will approve you for the loan. And then if you pass away, then they get to be your beneficiary. That's one way you can use it for business.
Okay.
But if you're talking about in terms of like the cash value, give it time. Work your business. Be patient. What did I say? Stay ready. So you don't have to get ready. Prepare for the transition. Network to grow your network. Do something for your business every day. Expect attacks and rise above. Right. And while you're doing that, 5 to 10 years later, you're going to look up and be like, dang, this is amazing. Now I'm ready to start my next business, right? And I'm able to pull that money out. You don't want to pull all of it. You just want to pull what you need.
Right. And whatever you do not use the whole. Do they allow you to use the whole policy for collateral, or just a percentage?
Well, it depends on the loan. I don't know what type of loan you're looking for. I don't know what type of bank or credit union that you're speaking with. So you want to ask all those questions to whoever you're trying to get the loan from.
Okay. Yeah. Well, don't use your whole policy for that.
Get the two. You know, sometimes I'll meet with. I'll say this. I'll say it this way. I have a doctor. Well, she's a pharmacist, and she recently went through a divorce, and she had to get another policy. Like she already had a policy, but because of the judge declaration, like she had to have another policy in which her ex and her daughter would be taken care of. So in that case, she didn't change the one she had. She left the first one like it was, with her mom being a beneficiary, but she just got a small turn. So she wasn't concerned with the cash value. She just got the turn with the living benefits because that was the judge ruling. So sometimes people have to get additional life insurance. And if you do, I mean, I love the IUL as a long-term plan. But term policies are not horrible because you can get a lot of coverage for a little bit of money, and they do serve a purpose too. They may not have any cash value, but if you get a term policy with the accelerated living benefits that I showed you, you can use that as mortgage protection. So let's say you have a 20-year term or you have a 30-year term. Like you just have that in the event that your spouse or you get sick or you pass away, you can pay off the home. You don't have to lose the home because you lost one of your sources of income from the household.
Right. Let's see if there is anything else. Make sure I'm not missing anything. Any more questions?
I can talk about this all day and all night, so beware. If you all have any questions, though, feel free to put them in the chat. Is it okay for me to share my contact information?
Well, so what I'll get you to do is post your contact. Just post your do a post with your information in the group, because you're in the group, and I think that would be easy for if it's someone who wants to reach out to you, they can just reach out to you that way.
Excellent.
Yeah, because that'll be the easiest way. Because once you do it in the chat, it's on this streaming platform, so I will have to pull it off.
Got it. Does anyone have any questions in regards to business? I mean, I have this business. I have another business too, but
I don't see any more. I know they were just more so asking about the different types of policies for right now, but no.
You have permanent. You have temporary. If you do a consultation or financial needs analysis, that is one of the things that I break down. I like to give my clients or potential clients multiple options and show you, like, here's an example of how this one would work, or this is how this one would work, and this is the third. Which one would you like? Would you like the Toyota version of the living benefits? Would you like the Lexus version of the living benefits, or you want the Lamborghini Maserati version of the living benefits?
No, you gotta get that Lamborghini Maserati version of these benefits. Don't downplay yourself.
Listen,
you gotta speak it into expectation, saying that you're gonna be able to do it.
Hey, here's what I do know though: some coverage is better than no coverage. So if you want the Lamborghini Maserati, but you start at the place where you have to go with the Toyota, start there, build your income, and then go into a place to where you can have that IUL.
Right.
But there are regular whole life policies. You have GUL, you have final expense. Final expenses usually between $5,000 and $25,000. Those are for people who have trouble getting covered because they have a number of health issues that make them almost uninsurable.
Now, if there are some persons who do have health conditions, can they do an IUL policy?
It depends on the health condition.
Okay.
So, diabetes, yes, right? But it has to be managed diabetes. And again, I work with several different companies. They all have their own guidelines. Okay. I've had one company decline someone with lupus. And I've had another company offer her a term policy with lupus, but they didn't offer all three of the living benefits. So you have three living benefits, accelerated living benefits. You have the terminal illness rider, you have the critical illness rider, and you have the chronic illness rider. So the person with lupus, she wasn't approved for the chronic, which is losing 2 out of 6 of your daily functions, but she was approved for the other 2. So it really varies. Like, it is a case-by-case situation. I can't say yes to all or no to all. I can tell you some off the top of my head that are, declined for IULs, like end-stage renal failure, schizophrenia, things like that. So, yeah, it varies.
Now, for the business side of everything, what would be required for those who actually want to go into a financial service business?
So if you want to go into a financial services business with me, then just reach out to me. I'll show you how I've built my business and show you what my program looks like. And if you like it, then you can become a business partner. But if you're just interested in financial services in general, the thing that you need to know is that you need 3 main things. You need a mentor, because you don't want to try to figure all this stuff out by yourself.
Right.
It's easier if you could just do the things that those of us who made 6 figures on our way to 7 have done, right? You want a mentor? You need a license to be able to do what we do in your state. So it's different for different states, but in the state of Texas, in which I live, you just sign up for the test and take the exam. Get your fingerprints done and submit an application, and now you're licensed to, or you have to have an approval from the state of Texas, but then you'll be licensed to do what we do. Mm-hmm. But again, you want to have that mentor, you want to have a license, and then during this time of the pandemic, I highly recommend that you learn to work your business online. I work my business from wherever I have Wi-Fi, okay? Because right now, the pandemic is hyping up, right? Yeah. And so when things start shutting down, people are at home. That's the best time to set appointments with people and say, hey, let's talk about your finances. And you get them on a Zoom. And you can collapse time. It's convenient. It's safe. Your client is in the comfort of their own home. You may be in the comfort of your own home.
You ain't got to worry about COVID.
You don't have to worry about COVID. So those are 3 things you need. You need technology, a mentor, and a license.
Okay. So, first, I want to thank you for sharing your time with us and answering the various questions about building wealth and finances. And please make sure you drop your information in the chat so that we can make sure we reach out to you, those who are interested in the process, be it the business side or be it actually getting some type of policy to start building wealth. And I think that is it. But thank you again for everything.
You are welcome. It's been a pleasure. I love this. Like, this is what I do, because once again, I know I do good for people. Unfortunately, I've been 2 funerals 2 Saturdays in a row.